Good morning, everyone. This is Corey Hinkle with your Ankerstar Wealth Daily Update. We heard yesterday from Amazon and Apple with their Q3 earnings for 2025. I'm going to be addressing in the show today not only how those reports are impacting the markets, but also is today a good day to go out and buy Apple stock or Amazon stock to add to it? Now, of course, some of our clients are already overweight those positions in different ways, and of course, according to different accounts, taxable accounts can get a little messier over time than some of those retirement accounts due to the tax consequences. But we're going to just talk in general. Are either one of them a buy today, or hey, maybe even a sell at current prices? But first, before I begin, I must remind you this is a financial education presentation. You must do your own due diligence before acting on anything you hear in this presentation. More disclaimer information can be found at ankerstarwealth.com, and the opinions expressed are mine and mine alone. All right, jumping over to a market update, you can see markets are up nicely right now. You have the S&P 500, not quite at all-time highs, up about 1/3%, and then the NASDAQ up about 1%. Most of that being driven by the returns in Amazon stock today. Now, I'm going to start us with Apple on this journey. So Apple today down, really flat on the day. If you go out to a 1 year, you see Apple's just broken out to new all-time highs. And generally, this is viewed as very bullish active price behavior. Anyone who's ever bought the stock now is up on the stock. No one is going to be tax loss harvesting or feeling compelled, to exit out of fear or anything like that. So psychologically, it's a good thing to see price at all-time highs and breaking out. I might be about to flip green right now, but that's not really what you are interested in here. You're interested in, is this a buy signal for Apple stock? Now, again, you've likely held the stock for quite some time by this point. If you go look at that report, I'm not going to go through all the details. I know you don't want to go through the weeds with me to that extent, but you can see sales were up nicely year over year. And then actually what they were able to bring to that bottom line, their net income up really nicely year over year for this 3 months ended. Now, I actually want you really to focus on this number here. So net income, Apple brought down to the bottom line. We'll call it 27 billion in this quarter. Let's just say on an annual basis at this point, about 100 billion. Now, of course, they are growing this number, but the question is Amazon or is Apple a buy here? Well, if you go look at that market cap on that last screen we were on, Apple's sitting right at they are new to the $4 trillion club. It's a pretty elite club, but they're in it. So now that they've hit 4 trillion, they're making 100 billion a year. That's going to put you're going to be paying 40 times earnings or so. This number should be a little higher here, but you're going to be paying 40 times earnings for Apple here. Now, keep that in mind because let's go look, historically, what have you paid for Apple stock? If you go back, newer companies, younger, less mature companies, you can get really distorted metrics because revenue is growing quickly, margins are low. It's in company in growth mode, right? It's totally different beast. I would argue that Apple began to mature there probably around 2010, 2011. That was the time where the iPhone had relatively dominant market share and was actually still in big time growth mode, as you'll see in just a moment. But had you bought the stock in, let's say, 2012, 2013, you were paying actually below market multiple. Apple was viewed very different back then. Apple was viewed as a hardware commodity, really. As simple as that. No real moat around the business. Now, obviously, investors at that time were very wrong. Investors can be wrong sometimes. And the entire market was wrong because Apple has expanded. They've had multiple expansion, multiple being this price to earnings ratio. They've expanded up now to that 40 price to earnings ratio. Now this is about double the market as a whole. So you'd expect investors buying today would need Apple to be growing twice as fast as the market, right? In order for it to be a compelling buy here. Now, what are we really growing? It's actually pretty impressive what Apple's doing on their $400 billion revenue base, very large revenue base. Now, in this recent quarter, this is a little misleading. In this recent quarter, they were able to get, it was either 8 or 9% revenue growth. 8 or 9% revenue growth. So high single digits, we'll call it. And they were able to grow that net income pretty quickly year over year. So they were able to bring a little bit more to the bottom line than they were from just the revenue growth. Now, is Apple growing twice as fast as the market? They kind of aren't. Now, let's say you were a buyer back then. You know, you bought Apple back in 2013 or so. You paid, let's just say, you got about a $400 billion valuation. You could have bought it a little cheaper, around there. You'd be up, let's say, anywhere from 800 to 1,000% on the stock. Now, should investors today buying Apple expect an 800 to 1,000% gain on the stock over the next 10 years? So looking out to 2035. Let's go look at how Apple was actually growing back then. Had you bought it back then, look at the growth rates you would have been buying into. 2007 all the way out to 2012. You had really 2005 and 6 included as well. You had very high double-digit growth rates, as high as in 2010. Imagine growing your revenue 80% in 2010 and then turning around and growing it almost 70% the very next year. Oh my, what an amazing time, right? And valuations were actually low at this time. You saw it. It was valued like just a commodity that had no staying power in a sense. So those growth rates have slowed. If we want Apple to go up 1,000% from here, what are we going to need it to be? We're going to need it to be a $40 trillion company. And you're probably going to need a revenue base of, at the very least, $4 trillion in revenue a year. So how does Apple get from 400 million a year? Basically, how do they 10x all of this, right, in 10 years? Can they get from 400 billion a year in revenue to 4 trillion? If they're going to do that, they're going to actually have to grow that revenue compounded on an annual compound basis of about 26%. Hold on, I have the exact number here. I did the math for you. Yeah, 25.89%. So can Apple turn up that revenue growth back to 25, 26%? Nothing's impossible. We don't currently have a real roadmap for that. Actually, oddly enough, Apple does not have a very large global market share in smartphones. So Android is generally it has a higher market share, and it's not impossible that Apple could take market share globally in a way that they've never done before. So that's out there. It's not impossible, but is that the base case expectation? I don't know. So is Apple a buy today? I think I got to go with Jim Cramer on this. You own it and you just don't sell it. It's still growing, it's stable, and it's Apple. Easy to own. I wouldn't be looking to buy here. Where would I buy? If you got to revisit down to those April lows there, under 200, you're looking quite a bit safer. After all, it's a really high quality company and defensive, with a defensible moat. Okay, Amazon, different story today. I'll spare you all of the details from Amazon's report, but I will share just a couple of things with you. Of course, they beat in every metric, and I'm just going to show you one important thing that's happening year over year and quarter over quarter, we're going to go look at those operating margins. Amazon actually has almost double the revenue of an Apple. They're looking at revenue between 7 and 800 billion per year. Maybe even as pulling really close to that 800 billion a year revenue. Now, of course, some of that is coming from the online retail, so it's a little bit like a Walmart or a Costco, right? You get big revenue but smaller margins. But Amazon, if you look year over year, right, Q3 2025 operating margin, and this is in North America, you've got 6.6% in this quarter. In the year ago quarter, you were down at 5.9%. So all of this investment that they made, they went on a huge CapEx spending spree really around the time of COVID, and they are now reaping the benefits of all that. And we see the fleets everywhere. I can't drive anywhere without seeing Amazon van. And then much less the kids can't even play in the street anymore with all the Amazon and delivery vans and DoorDash and all this stuff. So they're expanding margins in a very impressive way, and they're growing revenue in a very impressive way. If we go to their highlight number, because people have been really worried about AWS, Amazon Web Services. Well, they are now accelerating growth there. It's important to note, if you are someone who's a little bit like me, kind of concerned about valuations in some places, some of this, we're seeing it in Azure and in AWS. Some of the acceleration in growth is also tied to the AI theme. So, and people leasing things from them, related to that. So it's something to watch, right? There's a level of AI, not dependency, right? But there's an AI impact there. By no means are they dependent on AI, but they're impacted by it positively right now. And hopefully that remains true moving forward. Now, Amazon's different. Is Amazon a buy today? Let's just go look at one thing, and I'll leave you soon. Here, we'll go to a price to sales ratio. It's a little smoother. Remember, is Amazon at all-time high price to sales ratio? They are not. Amazon or Apple kind of was at all-time high valuations, right? Amazon is not, but at the same time, Amazon is increasing margins in ways that we've never seen. Go look at the operating margin for Amazon, right? You barely reached profitability there after the tech bubble. And then, you peaked at 6, but you've really been at 5, 4, 3, 2, 1, 1, 2, 3. You're not used to seeing Amazon flirting with these double-digit operating margins. And now they're there, and they'll probably continue to expand. What do we know about Amazon? Amazon is going to be what I believe is the largest beneficiary of robotics in the world of any company. So Amazon, could you go out and buy this stock today? You'd probably be okay. They are not trading at peak valuations. Look at their price to earnings. You're looking at what's typically been a 50, down at it had gotten close to 30 for a while. So it was trading really cheap. Again, a little bit above a market multiple, but for the quality of a company like Amazon, still putting up 20% revenue growth on an AWS, the cloud leader. You're safer there than you were from a valuation standpoint than on the Apple side of things. So Amazon, a little easier to buy after the rip if you just had to. Again, it's just my opinion. So this is a financial education presentation only. And that's all we have for you today. Hopefully we stay green. Nothing spooky happens into the close. And Mike and I will be back next week to talk to you then. Bye, everybody.